Anyway, I still have here Temitope Olubile still dwelling on this particular issue we're talking about, commodities here. Well, I'm sure you listened to Mr. Akabogo talking about the developments in the downstream sector. We've seen the oil price coming up, So are we likely to pay more for fuel?
I mean, the direction that we see that policymakers are taking now is, our domestic pump price to be, for our domestic pump price to be reflective of global, oil price. And, in a time where revenue is strained, you want to be able to save as much as you can. So if you remove the subsidies that they would have paid to, keep prices at a fixed rate, you could use those subsidies saved for other, development and infrastructure needs. So, I mean, it makes sense at this time for PMS price to be reflective of global oil price. Yeah.
All right. Just hold your thoughts there. Of course, we'll get back to you. We'll take a quick break, and of course, we'll continue with this conversation. To stay with us. Well, still talking domestic commodities market, and I still have here in the studio Temitope Olubile, one of the research analysts with Financial Derivatives Company. Thank you very much, Temitope, for sticking on. All right, let's look at some of those burning economic issues there. External reserves, of course, have continued to dwindle. The CBN's forex rationing continues.
Yes.
What does that tell us?
Okay, so, like you said, external reserves just seems to be on a downward spiral. We're still going down. We're about $35.6 billion now. And, with...
despite the fact that we've seen oil price creeping up.
Yes, that's despite the fact that we've seen oil price, because CBN has, all these obligations that at a time like this, they have several obligations they're trying to meet. And, that explains why at a time like this, there's forex rationing, because we're not earning enough dollars from our export goods and even from other dollar earning sources like diaspora remittances, investment flows. We're not seeing that, coming in to, boost our external reserves. So that's why the CBN is rationing the forex now. Corporates, they're not able to meet. They're only meeting a small amount, a small percentage of corporate demand. And, even banks are having to ration the forex available to them. And, we may start to see the effect of that fully manifest when, global supply chains are fully back to, normal, what they were before the pandemic. That what would happen to import demand of these corporates that depend on, imported inputs, and, they will have to, book ahead of time. They may have to spend more for inventory, keeping of the inventory, because you have to book way ahead of the demand, the estimated demand. So that all these things are going to eat into their profits, the profits of these corporates.
And this is irrespective of the 41 items that were removed from accessing foreign exchange from the central bank.
Yes, and we saw that recently there was that banning of maize. Yes. All of these are all forex rationing strategies. Now, the what we're seeing is now the meeting only a small percentage of corporate demand. High-ticket forex demands are not being met by banks, and even the corporates are not able to access forex easily. So that's what we're seeing play out now.
Now, if this persists, what will that mean for domestic commodities prices eventually?
I mean, there will be the pass-through, the imported inflation. There will be that. We'll see the effect really on that side of sub-index of inflation, because exchange rate pass-through. First, you're not able to access the dollar, and then when you now access the dollar, there's that higher price you're paying more naira to meet to get just $1. So we see that would play out more in imported inflation. We can already see flour. If you take, for example, flour has already increased to 13,000 for a 50 kg bag. That's the exchange rate pass through already playing out. And when we see things like flour, what happens to your bread that flour is used to make, so we see that will play out in domestic commodities soon.
Now, the central bank over the weekend officially, adjusted the exchange rate, on its website. Yes. Why do you think the CBN had to wait till now to really do that?
I mean, I can't really speak for them, but I mean, I think why they had to do it at this point was, investors were, becoming skeptical. We saw even the World Bank had to postpone the meeting on giving us the loan support. So we see that those events had to I think that those events had to put pressure on the CBN, and they just had to. I mean, we're not fully at the IEFX rate yet, but we see that there has been that second adjustment for the year. So they had to, at a time like this, to be able to, international multilateral agencies are looking, and you want them to be able to give you these loan support facilities. You need it for your external reserves. You need it to meet your obligations. So they had to at a time like this. Yes.
Now, are we likely to see more adjustments, on the rates in the near future?
I mean, I think we might, let me put it like that. I think we might, because we're not fully at the IEFX rate, and the goal is to get to the IEFX rate and unify all the windows around, center it around the IEFX rate. And 379 is still a way off from 388 that we're seeing the IEFX trade at, the IEFX rate trade at. So it's possible, there's still that possibility on the table, yes.
Now, one of the goodies there is that interest rates could reverse downward trend. How so?
I mean, because first you see that, you're spending more naira to get, the dollar. So we see that there will be that mop up of liquidity from the system because of the exchange rate adjustment. And when that happens, we'll see that interest rates, less liquidity equals to, higher interest rates. So that is how that will play out. And we think that is a possibility in the near term for interest rates to reverse the downward trend.
Okay, again, on the burning economic issue, we have there Nigeria targets 100,000 tons of cocoa output in Ondo and Cross River states. Tell us about this. Nigeria, cocoa happens to be Nigeria's key export.
Yes, yes, it's one of our key agri exports. And, this time when your exports are cheaper, you need to... Again, your exports are cheaper and you're still not earning enough dollars from your export goods. So you need to look at diversifying your revenue base. And I think there's been more focus on, these cash crops, because cocoa is a huge cash crop right now. And, if we see that, if they're able to meet the target of 100,000 tons in Ondo and Cross River State respectively, that would, that would put in about 200,000 tons of our total output, so of total cocoa output. So that is good money that we need right now. And at a time when your exports are cheaper, these, and you'll be able to get more forex from these export goods. So it's a good time to diversify your revenue base. And before, cocoa used to be just strictly for the southwest, your Ondo, your Ogun, your Oyo, but now we see it going into the southeast. Cross River State is looking to boost its cocoa output, and that's really good for our export revenue.
Now, soybean prices, to remain depressed on weak Chinese demand. What's the implications for Nigeria?
Yes, I mean, Nigeria, we do about less than 500,000 tons for soybeans, and we see that there's the problem with our soybeans output right now is the crushing capacity, because the primary user of soybeans in Nigeria is for animal feed, is the animal feed industry. And when we see that there's no crushing capacity, the animal feed industry is not able to get the output that they need. But at a time when soybean prices the global soybean prices are projected to remain low, it's not really, and we also have the quality, domestic quality concerns. So it's not really a good time for our soybean output right now. But I mean, again, we still need to diversify our export base as much as we can.
All right, let's look at other commodity price movement. Can you take us through those movements there and their drivers?
Okay, so for domestic commodities, we see that yam, we're seeing more new yam in the markets. Before, old yam was trading at about 3,000, for a medium size. But now we're seeing new yam into the markets as we approach the New Yam Festival. So that has, really brought yam prices down. We can see you can get a new yam medium size for about 1,150 now, and that's that's coming from what we were getting before at 3,000. We're seeing that play out, and as we get into the harvest season of more of these domestic commodities, we'll see that the increased supply would push down prices. But even if prices are pushed down, consumer disposable income is still very weak, and they may not be able to demand for as much as they used to. But we're hoping that harvest season will push down domestic commodity prices in the near term.
So what's the general outlook for commodities market?
So, the general outlook is that except for your imported goods, which there's a lot of imported goods in the market, in domestic market, you should expect a significant increase in domestic goods. The exchange rate pass-through will begin to really play out, and that would really bore a hole in consumer pockets. But your domestic commodities, as we have put the harvest season, we're projecting that these commodity prices would fall.
What about oil commodity?
Oil remains, a volatile commodity where we're seeing that there's that demand optimism. Saudi Arabia is saying, Asian demand is picking up, and that's, that was good news yesterday. We're also seeing the supply optimism. Iraq, which was mentioned alongside Nigeria for, not complying with their OPEC quota, they've promised and they've committed to deepen output cuts. So there's those supply and demand optimism playing out, but the demand concerns still remain, because if you look at the countries that are leading the COVID cases now that are having a second wave, you have US, which is a key exporter of, the commodity, and we have India too. These countries that import and, use this commodity a lot, there's still that demand concern of what happens if there's a second lockdown.
All right, Temitope, thank you for your time. We'll be back in a moment.